Okay, good morning. It is Monday the 20th, and we are at our Finance Committee meeting. Our first order of business is to review quarterly financials for revenues and expenditures. So, quarter one is really kind of always the question mark, because most of our is salaries and benefits, obviously, and that accrues continually, but nothing in our school budget basically is quarter, unfortunately too. So, and given that we just finalized our budget, you'll see in our spreadsheets that the final budget has not been entered. We'll get to the final budget, what it looks like, but again, ultimately the details of that will get entered later in November too as well. But the pieces that we like to look at for quarter one is how are we doing in comparison to a year ago, right, in the last couple years, because that kind of helps us gauge about where we're at and things like that too as well. So let's talk about revenues first. Again, right now, again, sorry for the scribble, I kind of copied one, but ultimately we're looking at that chart that says quarter one revenues right there. Yep. Revenues are looking good. We are up a few $1,000s from where we were a year ago. The good news is from a revenue standpoint, our student count is basically the same as where it was a year ago, so we are right on track. You will note as you take a look at some of the documentation, those Skyward spreadsheets that are so much fun to read, I did take out some of the variables that are differences in each year. You know, for instance, the tax, our last tax roll we just got in August for last school year, but obviously it gets recorded for this year. And then I take out any federal grants. Like a year ago, we had $67,000 for EBIS. It was kind of those final COVID dollars that the federal government had. So when we take a look at kind of an apples to apples comparison, we're doing really, really well on our revenue standpoint too as well. Nothing really stands out as oh boy, you know, where are we down, where are we short? Everything is really coming in as we would predict from the last couple of years too as well. So that's kind of the revenue side of things. From the expense standpoint, again, things are looking really good right now. You'll notice that we are down from where we were a year ago by almost $300,000. If we recall, we had an extra $67,000 from that EBIS grant, so there's some of that we paid for. But ultimately, we had a literacy adoption that we went through that was authorized, and so that's kind of what some of those dollar makeups were from a year ago. But when we take a look at our expenses from what we would expect for our quarter one, really right on from what we're looking at as well. So quarter one, right, really kind of where we predict it to be. Halfway through, obviously we'll give an update in January from a quarter two standpoint. That'll be a much better indicator on where things are and things like that too as well. So quarter one annual reports are pretty blah. Anything on the quarterly reports?
I have nothing.
Nothing? Nope. Okay. All right. Let's talk budget. So I did create a memo for the committee, and ultimately would be moving forward to the board with information as it relates to what we predicted. Obviously, we presented a preliminary budget in May. Then we kind of revised that a little bit come the annual meeting, ultimately around the state aid that was estimated on July 1st. But if we take a look at where we were as what was presented at the annual meeting to where we are today, the biggest change was the state estimate of state aid was reduced almost 10%. We were anticipating $5.1 million. Ultimately, they gave us $4.6 million in change. When they must have taken a look at our increased property value and probably said, boy, you guys are continuing to become more property rich, which is how the formula works. And they took some of our state aid and pushed it across the rest of the state. The other pieces to the state aid puzzle is obviously we're a growing school district too as well, so we're up about 23 FTE or full-time equivalent students. So that plays into that as well. But ultimately, as our district becomes more property rich, the current school funding formula says the more property you have, the less state aid you have. So right now, I think we're pretty good at, they're giving us 40% state aid from that standpoint too. The other piece that should be noted is in this biennial budget, there was no increase to state aid over the last 2 years. So that was the first time that this has happened in a long, long time where a biennial budget did not give any property taxpayer dollars into that.
Say, I'll have to talk to you later, I'm in a meeting. Okay?
Maybe,
Yeah, I'll have,
you wouldn't move the clock right now.
yeah, but we won't worry about it.
Okay,
We're not gonna bring them back in. Okay,
okay, bye.
bye-bye.
So no new state aid, which meant that all of the increase, the 325 went on to the levy as we look across there too. So the first variable that we take a look at is student membership count. Summer school's the same, September count, we are up 5 from what we were estimating. The independent charter school went up by 2. Again, that's just something that we have no control over. Again, that's kind of more of a voucher setting. And then our total membership, from what we were looking at from the annual meeting, went up about 7 FTE from that standpoint too. So now remember, our FTE or our student count is a rolling 3-year average, and as our school district continues to grow with membership, we fall off a little number to make a bigger number. When you take a look at it, our total membership 3-year rolling average is now 23 increase from where it was a year ago. So the interesting part is that we're up 23 on our revenue limit, but we are only up 5 students in our bus and seat count, basically our resident and open enrollment counts. So last year at this time, we were 889, and this year we are at 894. So just a small negligible increase from that standpoint too. But the biggest thing is our revenue limit did increase because of that 3-year rolling average with our student FTE count. The second variable, like we just talked about, or that we kind of talked about, was equalized property values. Back on October 1st, we did receive our new property values, and they did increase 8.7% from over the year ago. As we know that when we take a look at our school district, some of that property increase is net new construction, which is an assistance on the tax levy, which ultimately divides out more property value across the district because there's just more homes and more property to be to kind of help handle that tax levy as we go forward. So again, a equalized property value for 8.7%, and that snapshot is January 1 to December 31st of 2024. So that's kind of the snapshot that the state uses. And finally, our third variable, as we take a look at, is what we just talked about. Our state aid did change about $500,000. Now, you will see, though, that the actual, though, did increase by about 4.8% or $210,000 from where we were a year ago. So we did get a slight increase, but not what we were expecting come July 1. But, so those are our 3 variables. As we take a look at it, ultimately the revenue limit is driven by those 3. We are increased by 23. This year, the biennial budget did allow us, actually for the next 400 years approximately, to increase $325 per student. So our per pupil now is $11,650. And when we put all of these pieces together onto our revenue limit, which you have, which is the colored piece of paper right here, basically it does create a levy of about $10.68 million, which is up about $68,000 difference from where we were at the annual meeting. The big difference, though, as you'll take a look at it, is the mill rate. So the levy went up by $68,000, but the mill rate, because of the decrease in what we anticipated, the mill rate did jump about 35 cents per thousand, unfortunately. Now, historically, you can see on the next page that that still is a decrease from a year ago. So it would be dropping about 6 cents per thousand across the entire district as we take a look at that too as well. So you put all 3 of those formulas together, you'll see on the back page too, we got some private school voucher increase, which just goes right on to the levy. Ultimately, it is recommended that we do basically a 330 mill rate with a tax levy of approximately, what's the number? Tax levy would be $6,023,967 moving forward. So you put them all together and that would be the max levy. Right now, we are at a balanced budget. Again, we entered the year with a balanced budget in July, and given all these variables, we feel that we can still hit that balanced budget because we basically hit within $68,000 of what we anticipated. So the discussion is do we want to levy to the max and set and recommend the mill rate to be 3.30 with the levy that is presented to us.
I doubt if it's gonna show much of a tax increase to our taxpayers. But that doesn't mean, because most people look at the overall tax bill.
Yep.
And we don't know what the other municipalities on there are doing.
Correct. I did connect with Arrowhead, the one part that we do know, and their mill rate is dropping by 1 cent. So going from $1.85 to $1.84. That is what they're recommending on their revenue limit too. So from the school standpoint, the mill rates will drop. We don't know what that means from an overall tax bill or what that means from an overall equalized value as it takes a look at each individual homeowner. Now, we do know that that mill rate is different too for each municipality as they divide out their property as well too. So there's that variable, but the district says this. Ultimately, if this is the recommendation, it goes to the full board, and then ultimately I then communicate with DPI what the board has approved, and then they take care of the calculation.
So if we didn't recommend to levy the MAC, let's say we split that 500,000 into lost 250,000, what impact would that have on the district?
Right now, that would, to me, I think we would have to go and do an unbalanced budget to then tap into $250,000 of our fund balance. I have a little bit of wiggle room in the budget, but obviously we always keep a little wiggle room just in case something happens, whether you need a new staff member or something across the board, more curricular materials, but that's where I think we would have to go.
How much did we come in under the budget
Last year, we came in under, actually, we overspent our budget because of the Fund 46 transfer. So
Okay.
we spent about $150,000 into our fund balance.
Okay.
So, and that also included about $200,000 worth of roof repair too as well. So that was unanticipated. So, at the end of the day, if you take those two equations out, we had about a $350,000 surplus, which out of a $10 million budget is probably right around about 3%. So, which is what we always try to have. So, and then because of our fund balance size, we're going to continue, at least would be my recommendation, to continue to shift any surplus into that Fund 46 so we can get a little bit more state aid, hopefully, as we take a look at our increased costs.
I would probably recommend that we go to the maximum amount that we can levy. I don't think there's been a year for quite a few years that we've not levied to the max.
Right, yep. Just given the continued increased costs of just operations, that's kind of the reality. And unfortunately, this biennial budget, there was no increase in property tax aid like it has been in the past. But that's kind of our current reality where we're at. And again, it is my recommendation that we levy to the max to maximize that complete revenue limit. And we are seeing a decrease in the mill rate, which is always nice to see too. but we can't control individual tax
Right.
bills,
Yeah.
which is what
Yeah.
people look at.
Yeah.
So, Patrick, are you good with that?
I
Good with that?
completely agree with
Okay.
Dean.
Then, ultimately, what we have here then is our last piece of information that would be ultimately approved by the board, and, basically is with the new revenue limit, I have adjusted the final budget, basically to take a look at each line item in the budget. Now that we have our final numbers, again, I've adjusted open enrollment in, open enrollment out, our final staffing numbers, obviously, because when we present a preliminary budget in May, we don't know all of our staffing costs. You know, we hire a teacher, I anticipate it being 60,000, it could be 50 or it could be 80. So you'll see these numbers are reflected of a current reality budget utilizing a full levy in each of those different woofer codes and, you know, pockets of woofer codes too as well. So it's basically where we would like to spend our money, and again, I have details that go into each one of those buckets, but ultimately, we present a big bucket picture to the board, and that is basically what's approved. Nothing stands out from over a year ago.
No.
No, it doesn't, not at all.
Just a quick question on the expenditures for the
Yep.
special ed curriculum.
Yep, Fund 27, okay. Okay,
And it goes down to $9,000 because of the state, from 1.373,950
can you tell me what line you're at there, or what,
page.
or it's, what woofer code, I'm in Fund 27 expenditures?
Right here.
Oh, expenditures, down here, okay.
The special ed
Yep, expenditures,
loses $9,000 or something, is that correct? Am I reading that correct?
from there,
Yeah.
Oh, yeah, that's just from our overall spend.
Okay.
Yep, that's just our overall
So you
spend.
don't need to-
Nope, so when we take a look at whether the
there's not gonna be any
cost,
decrease
curriculum,
in-
no
Okay.
decrease in services, nope.
Yeah, that's my concern.
What I can tell you is we hired a new special educator. We also brought somebody on, but no, that's negligible. And ultimately, we always try to get what we need, certainly, and there's things that ebb and flow through this budget as we move forward. The one piece you will see, the nice part though, is when I anticipated our revenues, you know, just above there, the state did increase their special education reimbursement from what they would say 33% to 45%.
Okay.
So that is not sufficient. It's basically, there's a pool of dollars and everybody puts in what they want to be reimbursed for. Typically, that's about 3 to 4% less. Last year, the state budget called for 33%. We got about 29%. This year, it's calling for 45. Hopefully, we get 40. I did not adjust the budget for a 40% increase. Okay, I'll believe it when I see it, because special education costs continue to increase. Patrick, to your point, more and more districts are spending more on special education, which means that bucket of reimbursement continues to get bigger, and they say there's only so many dollars, so. But, nope, we will make sure that we get what we need there as well. So that would be some increased revenue, potentially of about $80,000 at the end of the year,
Okay.
when everything gets washed out. So,
I heard from my mail lady that her daughter enjoys working with Lori, so.
yeah. So at least it seems like it. So that's what she tells us too as well. So we're excited to have her. So,
Yeah.
anything else? Budget-wise, again, we will be moving this forward. This is a big action item. And then ultimately, move it to the full board, and we'll see what they say. All right.
Yeah, just the only comment is I'd like to find out what algorithm they use to disperse the $500,000 elsewhere.
I'll take a look at it, yeah. The other piece this year too, from the state aid standpoint, a year ago, remember we were talking about MPS dollars?
Right.
So that was about 90,000, I think it was 87 or 89, so approximately there. And that was an increase onto our state aid a year ago. Obviously, they got their books in order enough to get their full state aid, so that's kind of a natural fall off, but
Okay.
we'll find out where, or, again, we won't know where that money went, we can just say, hey, why did our estimate drop so much,
Yeah.
is the question. So, and I'll see what I can find out. Right now, school finance people are just getting hammered with, the change in membership count. And so we're going from one platform to another, for that third Friday count. I can tell you that we had to work really, really hard to make sure it was balanced out. We've never worked this hard before because systems talking to each other, they're just trying to pull it from skyward to verify everything. We had to contact probably about 5 or 6 local school districts to say, hey, we need you to do this because our numbers aren't showing. It's always on the open enrollment in and the open enrollment out is where it is. So they're bombarded with that right now, but I'll see if I can get that answer for us. All right, well, thank you, gentlemen. Get that. Thank you. That concludes our meeting.